Good afternoon, ladies and gentlemen. Welcome to our special edition of Market Masters, where we get you to meet the finest brains on Dalal Street. And joining us today is none other than Mr. A. Balasubramanian. He's the Managing Director and CEO of Aditya Birla Sun Life Asset Management Company. Mr. Balasubramanian oversees 3,90,000 crore rupees with assets ranging from all kinds of investments, whether they are equity diversified funds, flexi cap funds, debt, as also thematic schemes. Of the 3,90,000 crore rupees in assets, about 1,90,000 crore rupees is in equities. A very good afternoon to you, Mr. Balasubramanian, and as always, it's such a pleasure listening to you. Please tell us, how do you evaluate sentiment on Dalal Street? What do you think is right at the moment? And is the Santa rallying in the offing?
Yeah, of course, the sentiment of the market, which I think currently we are saying, is the buoyancy continues. The way I've been saying, the broader the buoyancy that normally comes into the equity market, that remains. But having said that, the last 2-3 months, where we were generally market getting into some kind of consolidation phase, for a variety of reasons, which is basically centered around elections. And second is the general slowdown that we have seen in the GDP number. It's also reflecting on the second quarter number when companies reported, where some of the leading companies also reported relatively muted earnings growth. So that gave some bit of sense to the market for taking a break. I think we have seen the last 2 years, markets have been going one way up. And there is also a question about valuations. So as I speak right now, I think market is going through a consolidation phase, and that's something was expected, and it was well received by most of the people in general who are in the investing in the market. At the same time, the last 1 month we have again seen some bit of pickup in automobile sales numbers, and the festive season also has gone well. And the recent election that we have got completed in Maharashtra also gave more time for various ministries to step up their spending in the next, say, few months, as well as beyond, which is nothing but a government capex, which took some bit of backseat in the first 6 months or 8 months of this current financial year. And it should start coming back, given the fact that we are well positioned with respect to the fiscal numbers. And overall interest rate environment remains more or less stable, and the cost of capital continues to remain attractive for investment to continue. With the private sector investments coming up once again, where a lot of numbers or headline numbers, if you look at it, even for private sector investment, there has been significant progress that we are seeing. So all put together is basically keeping the buoyancy for the market intact. But however, we are also going through a consolidation phase.
Very good afternoon to you, Mr. Balasubramanian. Thank you so much for giving us the time. You know, we have seen a tale of two halves in this year 2024 gone by. The first half was really a one-way rally that surprised at every nook and corner for all the investors and traders as well. But the second half has largely been a little bit uncertain, volatile. At the same time, some phases of correction have happened, and at the same time now investors are a lot nervous as they enter into 2025. Help us understand, what is your outlook for the upcoming new year? How is it really going to pan out? Will it be a year of recovery? Will we see higher highs, or will we have to keep our expectations tempered with lower returns? What is it that you expect, sir?
Because I think like mutual fund, generally we sit together as investment team and come out with the full-fledged report at the end of the financial year, end of the calendar year. Our report will be out sometime in the 2 weeks in terms of putting our expectations for 2025. But having said that, now in the last, I think the last 1 quarter, the discussion has been around the interest rate cut. I think in 2025, we'll probably see the year beginning with interest rate cut. Maybe from Reserve Bank of India point of view, looking at 20 basis points cut, given the fact that we have seen a marginal slip in terms of GDP number. I mean, globally, I think we'll see interest rate cut in US coming in continuously. Therefore, monetary policy will be more supportive of keeping the interest rate regime lower. And second is, we'll also probably see in the year 2025 the significant unrest which was created on the geopolitical side. May also see end of some of those challenges that the world has been facing. I think some of them actually thanks to the US taking a vote that probably they will put end to some of the uncertainties hitting the world market, can potentially revive the growth back in the year 2025. Therefore, we will also probably see stable commodity prices, low oil prices. I think in some sense should be the driver of, I think, countries like us, Indian economic growth probably would see some kind of pickup. My view is 2025 would be a great year, both for US. The new regime is coming in, they will try and drive the growth back on the economy. At the same time, India would continue to be the most prominent economy among the emerging market, given the fact our fundamentals are strong, and anything that we are seeing actually in the US could only be positively have an impact in India, including oil prices, commodity prices remaining stable. It should only be positive for India. And third, of course, is the government push towards the public sector and the government investment, which is basically the government of India's investment in various projects, including state government investing in various projects. I think should probably gain more momentum and therefore start driving the growth back in the year 2025.
Right. Mr. Balasubramanian, what is the position of cash across equity assets in Aditya Birla Sun Life AMC? We are managing 1,90,000 crores in equity assets, but can you please share with our audience as to how levels of cash, percentage of cash holding has either improved or decreased in the month of December so far?
Yeah. So basically in the equity funds, we don't generally take a cash call, given the fact that the mandate is to look for companies on a continuous basis, which are investment purely on the basis of your research-based identification that you do, both on the bottom-up stock picking as well as some of the macro-based call that you take. The cash flow, what we normally maintain is about 3 to 4%, which is what normally we maintain. That is mainly to meet any potential opportunity that could come. Therefore, you need to have some cash. At the same time, keep more from the point of view balancing the portfolio with about only 2 to 3% kind of cash. So now, on average, the cash levels across all our equity schemes would be in the range of about 3 to 4% only.
Okay. So I'll now ask you, Mr. Balasubramanian, to help us identify any key themes that you believe should be on top of investors' radar as we move into the new year. We are going to be seeing the first major trigger by the way of budget now coming in on 1st Feb. Before that, we also have Mr. Donald Trump, although globally, taking office, and the way he shapes up of policies is also going to be one thing that investors will keep an eye out on, keeping in mind that whether the flows will return as the signs are already visible from the FIIs as well. Keeping in mind all of this, what is it that you would believe investors' top focus should be in 2025 in terms of themes and sectors?
Yeah, I think clearly from investors' point of view, one, we fight in the economic growth and some element of support with the optimism which they need to have, especially when it comes to the question of equity investing. I think that should continue. I think, as I mentioned earlier, the interest rates, if they start coming down, naturally, if the US interest rates come down by about 100 basis points, our estimate for next year, and as I am speaking, we are already seeing some of the other monetary policies also start cutting the rate, and India too will actually participate in the rate cut next year. So therefore, from investors' point of view, whenever such thing happens in monetary policy, it's done actually for two reasons. One, of course, drive the growth back, and so that the cost of capital comes down, the people will come back in investment, the investment mode, and therefore it actually start driving the growth in the economy as well as the corporate earnings. Therefore, from investors' point of view, I think they should continue to stay invested and continue their investment which they have been doing for last say 5, 6 years, 10 years, 15 years. Therefore, the equity as an asset class will remain one of the best asset class to invest in, given the fact that the interest rate starts coming down, then the earnings, equity assets will become more better alternate assets for investors' point of view. And my own belief is all the steps that will be now taken in the 2025, all of them actually would be more with an intention to drive back the growth in every economy that they are driving. Even a recent example of China, if you have to take, what are the steps that are being taken at this point of time, after seeing pressure for the last 2-3 years, all such steps that are being taken by the China as a government is more to get the growth back. Therefore, the growth is going to be the focus area for everyone. Of course, as always, the monetary policy authority looks at it, government looks at it. You have to right balance between the inflation and growth. My own belief is the entire focus would be more on the growth aspirations, how to get that revived. Therefore, one has to just keep that fight on the table by continuing to make the investment from longer term point of view through the equity and equity mutual funds.
Right, sir. Bala sir, you've been a spectacular bond trader in the early part of your life, and still, when you look at the AMC, debt is more than equity. Maybe that's a long structural story. But tell us, a new gentleman takes hold of Mint Street yesterday. The economy is slowing. The third rate cut will happen in the US on Wednesday. When do you think we will see a rate cut in the Lal Street? And more importantly, which is the top bond fund from your stable that you can recommend for investors who want to play this interest rate cut? Which is the long bond fund will you mention?
Sure. I think what you mentioned about the new governor taking charge the last week, definitely the way I see is historically any new governor, when they come on board, they continue to maintain the policy stance of the earlier regime. Therefore, my belief is they will continue because there is a monetary policy authorities. They have a defined framework in which they work, taking into account various moving parts of the economy. But having said that, though the general expectation was that the Reserve Bank of India will probably start cutting the rates the next financial year, not this financial year. With the recent print that we have seen on the GDP number, and food inflation, I would assume is more temporary, and we have getting a significant benefit on energy inflation being more favorable for India. Therefore, my own belief is in order to drive back the growth in the economy, there is high probability in the policy that will be released mostly in the month of February post-budget, may consider the first rate cut of 20 basis points, along with providing some bit of more liquidity in the systems. Of course, they also need to be looked at from the point of view of how the currency will behave. I think more than inflation, I think currency behavior will also be taken into account. But having said that, there is a high probability that the new governor may begin with a 20 basis point rate cut in this current financial year itself, immediately after the budget, rather than keeping it for the next financial year before the government borrowing program starts. But having said that, the fixed income side, what you mentioned about, we have been as a fund house advocating for investing in duration funds. Basically, in our case, we have funds like corporate bond fund, which invest about 3 to 3.5 years kind of durations. We have Birla Complex, which is almost 30 years of track record, which invest in close to about 7 years kind of durations. So we have been advising for quite some time, since the time the Indian bond index, Indian sovereign bond got included in the JP Morgan bond index. We have been suggesting that it's a time for investors, considered investors, to take exposure to the duration portfolio, those schemes which is mentioned about it. Of course, equity is something which everybody been promoting, but somebody who is not looking at only from tax point of view, but otherwise look at as the most alternate investment other than equity. Here, the duration funds is something which you have been recommending, and of course, these are two funds which I mentioned about: Aditya Birla Mutual Fund Corporate Bond Fund, as well as the Aditya Birla Mutual Fund Birla Income Plus.
Yeah, we'll keep that all in mind also. Mr. Balasubramanian, another space that I wanted your view on is the broader market space, the mid and the small cap space, especially the small caps. Why I want to bring this up is that just a few months ago, there was a lot of fear of exceptional froth being created in this space. Just a little, gap, and then we have again seen small caps soaring to record high levels yet again. This is despite most of the experts believing on the large caps being safer after having seen a one-way upward rally in the bull run in the last 3-4 years or so. So, and despite AMFI talking about restricting some of the funds to mid and small caps in the lump sum funds as well. Tell us what is really happening here. Is there still a lot of froth remaining that needs to be taken out? Should one be extremely cautious, or do you think this space will grow well in 2025?
Yeah. See, one good thing that has happened is actually in the last 2 months. Of course, I don't call it a fraud because every market goes through a period of overvaluations and undervaluations. And we also seen generally the expansion of market breadth and width also keeps happening depending upon how the economy grows. I think if one looks at the small and mid cap space, we have seen many companies getting the benefit of the Atmanirbhar Bharat in terms of spending by Government of India in various sectors, as well as the significant pickup that we saw in the engineering side of the of various sectors in India. I think many companies got the benefit, including sectors like auto got a significant benefit on the mid and small cap space. My own belief is this breadth and width will continue to expand, and most of the companies in India today who are run privately and private domain, they are all now looking at tapping the capital market for raising resources for the expansion purposes. They also want to, of course, get their company listed or got a long-term track record being in the unlisted space. They're also coming in, new companies are also coming. Therefore, that in my view, belief is will continue. But the last 2 months of consolidation and also correction that we saw in between in the small and mid-cap space, also in my own belief is I have removed some element of excess valuation which was setting in the small and mid-cap space. I think it got corrected a little bit. And maybe it got narrowed between large cap and mid and small cap space. Also look at the earnings growth of this company as the growth starts coming back in the year 2025 with interest rates coming down. Generally, small and mid-cap space have got a greater correlation to the interest rates falling scenario. Therefore, they should become one of the large beneficiary from their angle. Therefore, I think from investors' point of view, even from our point of view, we keep discussing, one should focus on asset allocation one. And second is large cap will continue to be, will be the core investment. Large cap and flexi cap will continue to be part of the core investment. At the same time, small and mid cap space, we are not looking at for 1 year investing or 3 year and 2 year investing. We are investing for 7 years and plus. Therefore, they should also come as part of the overall asset allocation, irrespective of whatever the market may talk about fraud and risk and valuations. But as long as you take a longer time horizon in small and mid cap space, that segment cannot be ignored given the fact that we would probably go towards a $10 trillion economy. Therefore, our market cap would also become $10 trillion economy over a period of time. And that cannot happen only with the large cap or Nifty stocks moving up. It should happen along with the entire market moving up. Therefore, this segment one should remain invested from a broader perspective.
Right. Bala sir, how I so wish that people who have come in the market now realize that they need to invest for 7 years or more. Now people want to invest for 7 minutes.
I don't know, but this is the challenge that everybody faces. In fact, I must also mention those who come for 7 minutes and daily trading and so on and so forth. At the end of the day, there are days they are happy, they are taking back home some money. There are days they are unhappy, they are taking back no money home, or rather lose money and go back home. I think if you want a real wealth create that you have to do, and if you want to clearly participate in India's growth story, I think the longer the period people have invested, even our own funds where we have seen 30 years of track record, there are many funds like Flexi Cap Fund, Fund and Equity Fund, a large and mid cap fund, have delivered a superior result from investors' point of view. Therefore, I think the power of compounding will be reflecting only if your time period is also longer.
Right. Bala sir, just as I have been very fortunate to have long friendships in the world of investing and fundamental analysis, we have learnt a lot from you. Similarly, we have equally strong friendships in the world of traders. But now I really fear for them. you see the kind of volatility that is there in the markets on weekly expiry day, you know, these are very, very dangerous for health and you know, long term survivability. On a very regular basis, I see many people going bankrupt, and they are very, very good traders. So I mean, how are you talking to your fund managers? How are you sort of speaking to your traders? What is the advice that you are offering them? You've been, as I have said, one of the world's best known bond traders in India.
I think but the point what you mentioned about is right when it comes to the question of individuals who are taking a punt in the market. Often individuals take a punt in the market using F&Os and daily trading and looking at the news flows, basis which they play a momentum game as well. Of course, the fund manager's point of view, one of the things that we keep maintaining all the times, we are not a short-term trader. We are looking at businesses that can deliver over a period of longer term, and therefore the fundamental way of investing in the stocks, whether it is sectors or stocks, I think that continues to remain as a focus area, supported by very strong research. The same way from traders' point of view, of course, they have to pay attention to the market volatility. At the same time, wherever there is a mispricing happens, wherever there is an inefficiency in the market gets created for a variety of reasons, then you must take advantage of those inefficiencies that comes in the market from your trade point of view. So that's something they look at. Of course, as you rightly said, volatility in the market is also an opportunity for money managers like us who are looking at investing for long term rather than looking for short term. But none of the trades that we, of course, we do it for short term. Therefore, use this as an opportunity to look at build your portfolios whenever there is a deep correction, whenever there is a huge fluctuation that happens. It can be used for the purpose of portfolio course correction that is also ongoing basis the money manager can do in terms of going overweight and underweight in stocks or sectors and so on and so forth. That is something that remains a common approach that we normally take in every investment decision that we take. That's a simple advice. Sometimes you can call it as a contra investing, you can call it as a value investing. These are some of the things which fund managers pay attention at all point of time while building the portfolio. But of course, we can't behave irrationally in our trades. We can't get swayed by what's happening in the marketplace. Therefore, we must use our experience and deep understanding of companies and sectors and apply those understanding in portfolio constructions.
Fair point, sir. We will definitely take note of that. You know, my last question to you would be for somebody who is, starting afresh, is a newbie, who's starting at this current stage in time, looking at a long term. I would say maybe 5-10 years is something that they have in mind. Now they want to deploy, their lump sum funds divided into various asset classes. How would you really advise him or her to do that investment? Does a large part still go in equity? Should there be, and how much of a debt component should there be? Looking at how gold and silver have performed, what is the core area of investments should go in this? Of course, looking at how the geopolitical tensions are continuously rising in the world. At the same time, what is the importance of real estate and also crypto? With now Trump's policies shifting favorably, there is a large part of investors community who's now already investing and wanting to look at this as a golden period of crypto emerging. What would you suggest, sir?
Sure. I think clearly, Shakti, from an investor's point of view, irrespective of the time, equity should be the primary investment vehicle as long as they are looking for a power of compounding which gets accrued over a period of time linked to the economic growth and company's performance, so on and so forth. And within that, I always believe one should stay invested in diversified equity funds such as a flexi cap fund or large cap fund or multi cap fund. Even multi asset allocation fund could be one of the options that can be looked at it. So therefore, staying even including small and mid cap fund as part of your portfolio, and portfolio construction is more important than anything else from a medium to long term point of view. But having said that, taking into account current market condition, definitely asset class like gold has done very well. But if you look at compare gold versus equity, the relative performance of equity would definitely be far better than gold. At the same time, one wants to play that gold and silver. Today, the multi-asset allocation fund serves the purpose, which invests in equity about 68%. The rest of it is invested in gold, silver, REIT, other fixed income asset class. Therefore, another fund that can be chosen. Anybody who comes to lump sum investment, I think multi-cap, multi-asset gain fund could be a choice for them to just go and invest your money, which takes care of equity investing principles, as well as other asset classes, you all you get in one go. Therefore, multi-asset gain fund could be one. But having said that, the large component of the portfolio, I would suggest, should go to the core equity funds, such as flexi cap fund, multi-cap funds, large cap funds, and smaller mid-cap fund or mid-cap fund. That should be your core. And then keep a time frame that I'm investing for not just 1 year or 6 months or short period. Assuming that I'm making an investment for 5-10 year period, therefore the power of compounding effect would be realized irrespective of whichever the market making investment.
Bala sir, when you look at how wonderfully well IT and pharma have performed, this is mostly a play for the US markets because both sectors get about 60 to 70% of their revenue and top line from the US geography. Do you think enough is enough and we have seen fairly decent valuations here, or for the long term holder of IT in particular, that good times are still in the offing?
I think as a fund house, we are quite bullish on both the sectors, Shrindra, both the IT and pharma. The two reasons: one, of course, the US tariff that is being under discussion may not have much impact as far as these two sectors concerns. India will continue to be the strong wicket when it comes to the question of exports. And second is, given the fact that rupee movement is also more in favor of some bit of weakness, given the general currency levels being expected globally, may also benefit most of the exporter companies, and especially pharma and technology space, I think would be the driver. But I must also remember that pharma sector has done well, but digital as a space, the last 2 days gone through consolidation phase. And as the interest rates start coming down, in general, we have seen tendency to spend more money in building the future capability, the IT spending, other things generally goes up. Therefore, it should only benefit the digital as a sectors. In addition to what I mentioned earlier in terms of you have your investment diversified equity portfolio, the three funds which normally we suggest on the thematic side, one, of course, Digital India Fund, which basically invest in technology companies that generally have the tendency to give perform well in an interest rate falling scenario. And second is the consumption theme. As the interest rates start coming down, when the credit score starts coming back, I think our own belief is consumption will also start picking up. There's good support coming from a rural segment of the economy. And third, of course, we do suggest is on the quant fund, which again comes in thematic category. But the money manager will take a choice in terms of which is the fund in which is the sector in which they have to make investment, and therefore they keep shuffling the portfolio depending upon the trend that they notice every 3 months. This is the way I think we are positioning. But as you rightly asked, Digital India Fund is something, it comes in thematic category to put it as part of the satellite portfolio of every investors, in addition to the core portfolio that they generate investing in diversified equity portfolio.
Okay, got that. Any tips, sir, for the fresh investors, for seasoned investors at the beginning of this new year? What would your advice be?
One, start investing. I don't think too much in terms of, okay, 2025, what should you do, which will time, and whether you time the market and so on and so forth. Start investing and choose the diversified equity funds as your onboarding of your investment, and continue to make the investment without any break. At the end of the day, we have to look beyond 2025 and we have to look at the Atmanirbhar Bharat, which I think government of India is pushing it, Viksit Bharat, which essentially means we have a long runway to benefit out of the whole benefit that can accrue to India. Therefore, look beyond 2025 and keep that investment as a regular, continuous, with a 100% faith that I'm making investment for long term.
Okay. Bala sir, can you explain the logic of this new fund that you are launching on the conglomerate space? I am sure all top 10 stocks in the conglomerates that are mentioned in the report are already a part of many funds that Aditya Birla Sun Life Mutual Fund AMC has. So what is this logic of floating a special thematic scheme under this banner? Is it just a marketing ploy, or is there long-term wealth to be made?
When we conceived this product, Shailendra, clearly our thoughts were around look at the big conglomerates or conglomerates who have been building the business for many number of years, and who got interest in more than one business verticals as a corporate house, as a conglomerate. And each of these conglomerates, if you look at which has already been identified, they have businesses in engineering, technology, they have business in service areas, and so on and so forth. And second is, all these companies not only actually have the group vision, they also have deep balance sheet in building scale in existing businesses. And they also have the ability at the same time attract talent to build the new businesses as part of the future growth. And these are the businesses, these are the groups who invest in various businesses, create new business verticals, not for one generation. I always say they are creating for the multiple generations. So that is why we have chosen this as a category. And given the fact that it is a more, the filtering criteria is to look at the conglomerate has got more than two business verticals, which is different from each other. Clearly, it brings in a sharper focus in terms of number of groups that you can look at. You know, it comes to about almost India being a huge amount of entrepreneurs are in India, and each one of them are visionary leaders in respective areas or various business activities. Roughly about 24, 28 different conglomerate comes spread across the country. And second is, on each of these companies who are part of this, they have a clear long-term vision to create a shareholders' value. Therefore, the number of companies also comes to about roughly about 169 companies in which we can make investment. So become a sharper focus when it comes to the question of group selections, sector selections, as well as on stock selections. At the same time, sustainability. If you look at from a longer-term sustainability point of view, they are not cyclical nature in terms of business, but they are long-term fundamental value creator for the nature, both for the promoters, shareholders, and entire stakeholders, including exchequer. So that's the way we are looking at it. Though it's considered a thematic, but somebody wants to own the businesses in the country, various promoters-driven companies. Clearly, this fund becomes a choice, even to be put part of the core portfolio itself. So that's the way we see it. Though it comes a thematic, but somebody wants to take a longer-term bet and put their money. Definitely, this fund becomes one of the choice that they can choose, given the underlying nature of these schemes.
Right. Thank you, Bala sir, for this wonderful explanation on global macro, as also a lot of sectors that we discussed, and of course the eternal question, mid caps or small caps ka kya hoga. We hope to have you back once the rate cuts are in place as far as the Indian economy is concerned. Until then, have a nice day, and of course all our best wishes for this new NFO that has come in from the ABSL AMC stable. Thank you for your time, sir.
Yeah, thank you. Thank you.
Mr. A. Balasubramanian, he's the CEO and Managing Director of Aditya Birla Sun Life Asset Management Company, who has launched a new scheme called the Aditya Birla Sun Life Conglomerate Fund. I hope you enjoyed the conversation with Mr. A. Balasubramanian, just as Sakshi and I did, but remain glued to Business Today Television. There is a lot that is happening on the other side of this break.
iOS 18.2 is here, and is this Apple's biggest update of 2024? Well, that seems to be the case. If you have an iPhone, if you have an iPad, update them to iOS 18.2 because it brings with it a whole suite of Apple intelligence features, and the two that are reigning supreme are ChatGPT integration with Siri as well as visual